Suresh, good to have you with us on the show today. So you've just come back from Mauritius. Apart from, I hope that, having a bit of time on the beaches, what is your initial impression of the economy at this point in time in light of all the concerns that we always hear about in terms of the Eurozone?
Hi Sam, I was quite excited about not going to the beach because I think so many meetings, but there's quite a bit of excitement in Mauritius at the moment. I met with a couple of banks and it seems to be quite a positive story. I mean, the economy is growing only at about 3.5%. But the banking sector has been very, very buoyant. I mean, 2/3 of their business is generated in Mauritius. But the one thing that I'm finding is that the banks are increasingly looking at Africa. They've contributed almost over the last 10 years to about probably around 44% of the total FDI flows into India, which is about $54 billion. So their main focus has been on India business to buoy their global businesses. But Africa is now starting to become a very important play for them. We've recently seen the government of Kenya, for example, issue some debt, and we've seen some Mauritian banks starting to participate in that.
What is the concern with India? I mean, I was just doing some reading behind this, and they were saying that there were issues with the Indian government having now put this kind of new anti-tax avoidance rules into play, the general anti-avoidance tax rules known as GAR. How has that affected kind of relations between the Indian and Mauritian authorities?
Sam, Mauritius has got a double taxation avoidance agreement with a lot of about 34 countries. And I mean, with India, this agreement goes back quite a number of years. There's been a general discussion because I think one of the things they're trying to avoid for Indian companies is round tripping. We're actually taking money out of the country, parking it for a lower tax rate.
But is there evidence of that?
No. I think this is clearly what the Mauritian bankers and the central bank has made very, very clear. I think they've been clear that whilst this may be a concern, I think they've got ample regulations and checks and balances in place in Mauritius to actually avoid this.
Yeah.
I think there's ongoing discussions with India, but it's my view that I think generally I don't think that they will do away with the DTA agreement as such.
I mean, diversity is always a good thing. And, when you're looking to countries where you're seeing growth in the economies, it makes sense that Mauritian banks are looking to Africa and sub-Saharan Africa. Tell us about some of the interesting kind of opportunistic transactions that we're seeing between Mauritian and sub-Saharan African banks.
Well, AfroAsia, for one, which is this niche boutique corporate investment bank in Mauritius, has now taken a 35% stake in Kingdom Bank in Zimbabwe. So they're looking at diversifying their earnings into territories that traditional sub-Saharan African banks have not looked at.
And interesting that they're looking into a country where they're having a bit of a liquidity crunch at the moment, but I'm sure that price was attractive.
Yeah, I think they're taking definitely a medium to long view in sub-Saharan Africa. We've seen a number of Mauritian banks now taking the lead in a number of oil import transactions, for example, in Zambia. Through PTA, a number of Mauritian banks are starting to participate. In fact, on the liability side, Rand Merchant Bank recently took Mauritius Commercial Bank to market for 500 million Rand bond issue.
Yeah.
Where they've actually now come and listed bonds in the South African market and raised money from institutional investors. So we're now seeing a gradual diversification, not only on the asset side, but also in terms of their resource raising. I wouldn't be surprised to see a few of the Mauritian banks going to the Eurobond markets as soon as market conditions improve.
Yeah, I mean, just talking about Eurobonds, I see Zambia's roadshow today ends with their Eurobond. But let's talk about, the strongest bank, MCB, and then you've got the next strongest bank, State Bank. So you've got both of those two banks holding the largest share of the market there, 70%. And then you've got a lot of the other smaller banks. So how does this affect the ability of banks to move outside of the borders, apart from those two big banks?
Sam, absolutely. You're spot on. I mean, State Bank of Mauritius and Mauritius Commercial Bank control a very big majority of the market share. But we must understand that there are about 20 other financial institutions that operate in the Mauritius market who are booking global business. So their business that they are procuring from outside the borders of Mauritius are being booked there, obviously because they get a substantial tax benefit from doing so. So more and more importantly, I think the regulations in Mauritius are opening up banks to open up in their country and to benefit. And Islamic banking is another big thing that they're now trying to encourage. So I wouldn't be surprised again to see Mauritius being the hub for Islamic banking for Africa.
Yeah, I mean, Mauritius is highly rated. Just looking at the Commonwealth Secretariat study saying Mauritius is one of the most highly regulated financial banking sectors or financial sectors amongst developed world peers, and especially against peers like Singapore and like China. And that says a lot for those who are wanting to do business in sub-Saharan Africa using, say, Mauritius as a channel as opposed to, the likes of Singapore.
Absolutely, and I think they have to be very well regulated. If you're comparing themselves with the likes of a Dubai, for Qatar Financial Authority, Singapore, Hong Kong, I think being in Africa and being sort of that midway through the East and Africa, I think they have to be. I think I met with the Bank of Mauritius and I was very, very favorably impressed by the regulatory controls that they have in place. I think they've got their act right, and banks now are looking to diversify because there's not much of that business going around in Mauritius that they'll have to look at diversifying at some point in time, and they've already started to do that. I
mean, when we talk about the likes of MCB and how they're going to fare against other banks that are all looking to grow in Africa, what would you say the strengths of an MCB is right now versus a Standard Bank, versus a Nedbank who's got the tie-up with ETI, versus perhaps other local banks that have presence in some of the key sub-Saharan African economies?
Look, you can't compare the two. I mean, the local banks in South Africa are large. They have larger balance sheets. Whilst compared to a Mauritius commercial bank, which is a $4.5 billion balance sheet, you can't compare. I think the bank is looking at Africa on an opportunistic basis. They're looking to get involved in certain key transactions as participants, as opposed to going and leading transactions.
And especially perhaps not in the retail banking space, more trade finance, which
very
is
much
where
so.
they say the growth is.
Very much so. It's very much a collaborative effort. But what they're doing is that through collaboration, they are able to sort of grow, get their feet wet. But also, if you look at the Maldives, in Madagascar, in the Seychelles, where South African banks, it's too small a market, or they don't know that market. They're making some good inroads into that market as well.
Now you've got Azad Durman. He has been tasked with being, I suppose, the roving ambassador in inverted commas for Mauritian banks in sub-Saharan Africa. And he says that they're trying to build Mauritius into this financial hub. You've got financial hubs like London, Dubai. I suppose you could call South Africa a financial hub in Africa. What are Mauritius's chances in terms of being able to compete with those other financial hubs?
The hallmark of Mauritius, if you just look at how they've been able to play within the international space, they've been very ambassadorial and collaborative in their approach. And we've seen, Mauritian banks do the same in transactions. We recently did a one-year trade loan through RMB for a bank in Nigeria, and Mauritius Commercial Bank was in that particular transaction. So they're taking a lot of their lead from banks who have quite a large footprint, or who have experience into Africa, and sort of, collaborating with those banks. And I think this is one way that you are able to grow without necessarily being seen as a key competitor.
Yeah, and biting the piece of the pie that you can, chew on comfortably,
Absolutely.
basically. Thank you so much for joining us, Suresh Chaytoo, Sector Director of Banks and DFIs at RMB.